We calculate gross value added and gross domestic product. But at which price? The Central Statistical Office of India calculates gross value added at basic prices and the gross domestic product at market prices. In order to comprehend gross value added at basic prices and the gross domestic product at market prices, one has to understand what is the meaning of factor cost, basic prices, and market prices considering an economy. Hence, this video is on factor cost, basic prices, and market prices. While gross domestic product is the summation of gross value added of all the firms in an economy, gross value added is the value of output excluding the value of intermediate goods expressed in terms of money. Imagine a firm produces output. Example, LED bulbs is produced by an LED lighting company, or a counseling service is provided by a hospital. Who and what are the factors of production? Does it cost some amount of money? Yes, it does. When we intend to produce something, there is collaboration of mainly four factors of production. They are the entrepreneur, land, labor, and capital. The amount that is spent on these factors of production is called the factor cost. They are the payments to the factors of production. And when we say gross domestic product at factor cost, it includes only those payments and nothing else. But does these producers pay taxes? Yes. And it is not included in the factor cost. Do they receive subsidies? Yes, sometimes by the government. Tax as well as subsidies act as an important agent which affects the prices of the goods and services in the market. These are the two kinds of taxes that are levied by the government. Increase or decrease in these taxes will affect the cost of production, which in turn affects the price of the output. Production taxes, these are the taxes that a firm pays and it is received by the government. They are paid by the producers. Examples, land revenue, stamp and registration fees. Product taxes, it is paid or received per unit of product. These are the kinds of taxes that could be passed on to the ultimate consumers. Example, you are enjoying the services of the hotel. You might have noticed they give you a bill which includes certain percent of GST that is added on. GST is one example of such product taxes. Export and import duties are other kind of product taxes that are paid. Moving on to the subsidies, we have two kinds of subsidies: production subsidies and product subsidies. Government provides subsidies to the producers and consumers. It is for the welfare purpose, so that they won't be adversely affected by the market driven price rises. Example, due to market forces, if the fertilizers price increases, the farmers might get adversely impacted, as it increases the production cost for which they may not be ready. As a result, they may give up sowing. They might invest in something affordable. This results in the production from the agriculture sector to decrease, which cannot be good for future. Example, wheat and rice are the staple food items in India. If the price of the fertilizers that help to get best yield of these has increased, those who cannot afford it may drop the idea of producing them, which will result in lowering of wheat and rice production. Later, we might have to import them, which is not a good idea. In order to avoid that, as well as for welfare of farmers, the government pays a part of fertilizers price, which makes it affordable to the farmers. This kind of subsidies could be called production subsidies. These kind of subsidies are mainly useful to the producers, hence called the production subsidies. Subsidies that are useful to consumers are called product subsidies. Example, availability of wheat and rice in the market at subsidized prices. If the market price is 38 per kg of wheat, to the consumers it is available at 28 kg at 28 per kg, because the government is providing subsidy at rupees 10. Subsidies has to be deducted, as it cannot be included. It is a help by the government to the producers and consumers. When we exclude the production subsidies from the production taxes, we get the net production taxes. And when we exclude the product subsidies from the product taxes, we get the net product taxes. Remember, factor cost is the payment to factors of production which do not include any taxes. But it's not the same with basic prices. The basic price of any goods and services includes the net production tax. Suppose the LED manufacturer has paid stamp and registration fee for the land chosen to produce it. Then that also has to be considered while fixing the price of the produce, so that the cost of it could be recovered and there would be profits. In case if government has given subsidy, its amount has to be deducted. Basic prices are those prices which is fixed, keeping in mind the amount spent on factors of production and the production taxes that had to be paid and production subsidies if received. Hence, basic prices is the addition of factor cost and net production tax. When we say gross value added at basic prices, we consider the basic prices to arrive at it. Then how do we arrive at gross value added at market prices? By calculating it in terms of market prices. What are market prices? Market prices includes basic prices along with product taxes, excluding the product subsidies, or it is the sum of factor cost, net production taxes and net product taxes. We can replace the production taxes minus production subsidies with net production taxes and product taxes minus product subsidy with net product taxes. So, factor cost, it is the cost of factors of production. Basic prices, they are the prices which is fixed as a result of addition of factor cost and net production tax. Market prices, these are the prices which is fixed as a result of addition of factor cost, net production tax and net product tax. Gross value added. We can arrive at the gross value added at basic prices by calculating gross value added at factor costs and adding to it the net production taxes. And gross value added at market price could be calculated using the gross value added at basic price plus net product taxes. Summation of gross value added at market prices of all the firms in an economy provides us the gross domestic product at market prices.